The opinions and suggestions expressed on the following program are solely those of the participants and not necessarily endorsed by program sponsors or any radio station, media company, or platform broadcasting this program. The following program is a product of Causeway, LLC. The information in this broadcast is not intended as investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Causeway, LLC, and the company or platform broadcasting this program is not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Causeway, LLC, and the company or platform broadcasting this program makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk.
Government officials insist we will continue to inform as this story unfolds.
Welcome to Cryptocurrency with Matthew J. Moore, the Bitcoin-focused radio show that's waking the masses to the fiat money Ponzi scheme. Money is changing, and your freedom is at stake. So stick around and learn how to empower yourself for this new digital age. Now, here's your host, Matthew J. Moore.
Welcome, America, and welcome, world. No matter where you are or where you're listening from or what you're doing, I want to welcome every single one of you Bitcoin lovers, newbies, and experts, because you know what? We got a little bit of something for each of you. And you are now listening to Cryptocurrency with Matthew J. Moore. And yes, we are one of the only syndicated radio shows dedicated to that topic known as Bitcoin. And, we also talk about some other things like the economy, monetary policy, liberty, history, technology. There's so much that goes into it. And today is no exception. So, in fact, you might be wondering, what are we going to talk about today? Well, today's show, we're going to cover a topic that is unfolding in real time and could mean some big things coming up. But we plan to release this episode in podcast form on March 18th because this episode may be outdated in just a few days because, when things like this that are currently happening in the banking system and the economy, things tend to move pretty fast. So if you're listening to this on the radio, a lot of this might be referring to past events, but you still need to listen because the information in this episode is very, very valuable. And what we're seeing unfolding in the banking system, I don't know, could possibly be. There's a lot of people who think that this might be another 2008 moment or worse. So hopefully you're sitting on the edge of your seat. But if this is the tipping point that we've been talking about for years and years, things could heat up really fast. Literally, situations like this could change in a matter of hours sometimes. And heck, who knows? You might wake up and the world might be totally different. But here's the question, is your money safe in the banking system? What happens if things really do go south? Is your money safe? Because technically, there's only 10% of all U.S. dollars in existence that are actually physical. But today we're going to bring back a returning guest to cover this topic and more. But before I do, I have to introduce you to my wonderful producer, Brian LaRue. He is sitting across the table from me on the soundboard, making sure I don't say anything naughty. He's got that little censor button, right? But he is also the guru behind our awesome intros and outros. He literally does it all. Brian, welcome back to the show. Man, are you ready to once again fill in for Eric Cooper? Because, you know what, Eric, he's a great co-host, but, sometimes I got to let him take care of the family and work sometimes before he jumps on the radio with me. So thanks for filling in.
Absolutely, Matt. Thank you so much for having me.
Okay, well, if somebody was curious about your work, because, obviously they heard that wonderful intro there. If somebody wanted to mix and master a project, maybe create a soundtrack, maybe even have a radio show like ours, where would they go to, hire you?
Well, you can definitely go to my website. You can visit me at beyondyouproductions.com. And I'm obviously on social media, Facebook, Instagram, at larue.brian on Instagram specifically. You can search me up on Facebook, but my website is the best way to reach me.
Do it right now. I guarantee you. Go check them out. And in fact, we record this show every single week at Blue Studio here in Tulsa, Oklahoma. They are part of a company known as SoonerMarketingSolutions.com. So if you have marketing needs, go check them out. SoonerMarketingSolutions.com. They will most certainly hook you up with some awesome solutions. But since this is a hot topic right now, I say we get the show on the road and introduce our show's guest today. His name is Jerry Robinson, and he is an economist, and he's a trader, and he's the founder of a website called followthemoney.com. Really terrific stuff. Jerry, welcome to the syndicated version of our radio show. I know you've been on before when we were just doing this in Tulsa, but please share with the new listeners who you are and what you do.
Oh, thanks a lot for having me back on, Matt. I really appreciate you doing a great work trying to wake up the folks to what's going on. And that's what we're going to be talking about today. But yeah, as far as myself, my name is Jerry Robinson. I'm an economist. I'm a trend trader. I'm an author, investor, and I run followthemoney.com. We're all about educating people just like you who are listening on how to become a better investor, how to actually trade, how to protect yourself from this financial system that we're in. We've been doing it for more than 10 years, and we've helped a lot of people over time. So people can find us at followthemoney.com.
And I highly encourage it because I have seen Jerry's work up close and personal firsthand, and he is top notch. That's why I have him on the radio. That's why I'm talking to him today. So go check him out at followthemoney.com. Here's the deal, Jerry. Recently, everybody who's been watching the news, as long as they haven't had their head in the sand, they have seen that there's been a collapse of Silicon Valley Bank, which was the second largest bank to fail in U.S. history. And in addition, we saw things like Silvergate Bank and Signature Bank fail and have problems as well. And now we've got First Republic Bank, which I think have secured basically a bailout from a conglomerate of big banks. Supposedly, I've heard that it's more to do with protecting deposits. But, we also have the second largest bank in Switzerland that's in trouble. What's your take on all this? And explain to the audience in a nutshell, what is exactly happening here?
Yeah, so we have seen a lot, and people should be alarmed when they see what's happening. We've been educating our own members here about this financial sector warning that we see. So the financial sector is a major component of the United States economy. And when we think of the financial sector, we're really thinking of banks and insurance companies and things like this. Well, right now, what we're having a problem with is liquidity in banks. So you brought up Silicon Valley Bank, which was a very popular tech firm lender. They faced a liquidity crisis. And when that liquidity crisis became public, it sparked what could really only be called a social media panic that led to a massive amount of withdrawals, $42 billion on one day alone. That was about a quarter of the bank's total deposits. So you had this flood of withdrawals, destroyed the bank's finances. And in essence, what you ended up with was kind of a cascade of other people becoming concerned about their banks. And this kind of dominoed. The Treasury Department, the Fed, the FDIC all pulled out all the stops. So we've seen a tremendous amount of
Oh, I think we lost you, Jerry. Hold on, let's see. Can you hear us?
The former guarantees that we saw on banks, for example, with the FDIC insurance, that was extended beyond the $250,000 for these very high net worth depositors. So basically, without getting too geeky here with economics, basically what's happening is that the government is creating something known as moral hazard. And basically, a moral hazard is where if you can do something and get away with it, if you can do something wrong and get away with it, you're going to do it again. And that's in essence what the government is setting us up for, is more of these problems to continue. So I don't think we're through the woods yet. I think we're still in the middle of a liquidity crisis, but the government has made it very clear that they're ready to backstop any problems that arise from here.
Right. Well, and speaking of backstopping, I mean, essentially, to help stop the contagion in the banking system, the Federal Reserve launched the bank term funding program as an emergency lending program designed to safeguard financial institutions. And currently, I guess the duration of the program is a year long. Some are saying that this is like a move that's kind of a roundabout way of doing quantitative easing, since effectively the Fed has bailed out $600+ billion in bank bond losses and promised to provide $20 trillion in depositor guarantees. And you've got banks out there like J.P. Morgan saying that this could essentially inject an additional $2 trillion in the banking system. And then if you look at what the Fed's balance sheet. They increased their balance sheet by $300 billion, taking it back to levels it was back in November 2022. So basically, half the work that the Fed did over the last year and a half or so, they basically. The tightening, the reducing their balance sheet, basically that's all been undone, or at least half of it. What are your thoughts on that?
Well, it was almost always baked in the cards. I mean, when you see the Fed is beginning to unwind, the only thing that you can imagine, or they begin to tighten, the only reason that the Fed tightens is to untighten, that is to loosen. And the only reason that they loosen is so that they can tighten. I mean, these are really the only two dials that the Fed has. And so they were trying to shed some of that balance sheet, but now inevitably the banking sector has had problems. Now the banking sector here in the United States, as I mentioned, this moral hazard, really what's happened here, as you pointed out, is that the Fed has been raising interest rates at an astonishing pace. When we look back and we see what the Fed has done, just say in 2022, we're talking about a 5,000% increase in the federal funds rate from like 0.004 that it was way back, back at in 2021 to where it is now. I mean, we've had an incredible, breathtaking increase in rates. And that increase in rates, in essence, what this does is it pressures those who have lots and lots and lots of securities, bond securities, that are that have lower coupon rates, that have lower rates. And so in essence, what's happened is a lot of these banks are sitting on these unrealized losses, and therefore they're forced to either sell them at a massive loss because of the rate change, or they have to find liquidity somewhere else. And so this is really the Fed admitting that its own policies have created this liquidity crisis. And so they're basically tightening, and then they're also, as you pointed out, bailing out along the way. And they're probably going to have to bail out more, which brings up the great point. What exactly is the Fed really doing? Is it doing anything? I mean, really, it's just raising interest rates so as then to create a bunch of capital and give it to very large banks that are in need, these too big to fail banks. So again, this is something that I think is a problem, and I think Americans need to have their eyes wide open that this is how the banking sector is. This is how it's going to be as we go forward, unless they have more regulations. I'm not a huge government regulation guy, but when it comes to banks, the institutions that hold your money, you do want these institutions to have accountability. You do want them, to be regulated tightly. And bankers don't like this. I mean, they use their collective power to convince others that bank regulations are evil or detrimental to society. But I invite you to place your life savings into an unregulated bank, and we'll find that nobody, we have no takers. So if you're concerned, if you're listening out there, say, I'm a little concerned about this, respect the FDIC limits and consider the priority that your bank will receive from Washington if it fails. For example, the Bank of Sallisaw, Oklahoma will likely be less important to Washington than, bailing out Bank of America, for example. And right. This is creating all kinds of problems for these smaller banks, Matt.
It's true.
Yeah, Jerry, obviously these kinds of events don't go quietly into the night, but usually we see the other grass fires pop up as one gets put out. But are we on the brink of a new 2008?
Having written a book called Bankruptcy of Our Nation that came out during the 2008 crisis, I have to say that what we see now is different than what we saw in 2008. It's different. 2008 was a solvency crisis. Lehman Brothers and Bear Stearns, they collapsed. But this sparked a massive solvency crisis because that the Fed was ill prepared for because of the lax rules on the banking sector, which I was just talking about. So back in the 2000s, the Glass-Steagall Act and all of this had really kind of created a scenario where many of these banks in the 2000s were just getting way out of hand. And so what had to happen was it's like a game that we just continually play over and over. We tighten regulations, and then we loosen regulations, and then we tighten regulations, and it always ends up the same way. So with Dodd-Frank, the Dodd-Frank regulation that came in the wake of the 2008 crash, right, imperfect as it was, as imperfect as that regulation was, it still helped tighten the freewheeling that banks were engaged in back in the 2000s. And so what today we're facing is a liquidity crisis, not a structural crisis within the banks themselves. The banks are still well capitalized, whether you look at the United States or even Europe. They're better capitalized today than they were back then. The problem is that we didn't have social media the way we do today back in the 2008 crash. And so today people are nervous, and they've been through, a terrible 2 or 3 years in the economy. And many of them are concerned that things are going to break. And so you can create or spark a social media panic today that you couldn't do back in 2008. And that's exactly what we saw play out over the last couple of weeks. And that has regulators scared. They realize that the crisis may not be a systemic crisis per se, but it could be a crisis of confidence created through a social media panic. And I think that's a bigger concern than they may be saying publicly.
Right. Yeah. There's definitely a lot of people who are concerned about their money being in the bank. And, me as a Bitcoiner, we definitely harp on that idea of being your own bank. And you were making the point that, this is different from 2008 because it's more of a liquidity problem here. And, and we could look back and say, hey, it was, the Fed's extreme actions, because a lot of us, for a long time have been saying, that something's going to break in the system because of the Fed's, really extreme actions, moving forward to try to fight inflation. And with the way fractional reserve banking, I mean, if there really is more and more bank runs here in the coming days or months, that could cripple the entire banking system to some extent, and then force the Fed to, maybe make the COVID print look extremely small. What are your thoughts on that before we jump to break?
I think the Fed, the FDIC, and the Treasury jumped upon this and probably did what they thought was best, and that is to make outlandish promises. That is to take care of people beyond the FDIC insurance. Moral hazard, very bad idea. But I think that kind of resolve from these institutions helps to lessen any kind of future banking problem that we see, because now they basically muted it. They've served to mute it a little bit now in the public's eyes. Now, again, if another bank collapses, the Fed has to be ready to step in and pump money in. But if it continues to do this, then the crisis of confidence, which is the bigger crisis that people or economists are worried about, will be stayed. And I think the Fed realizes that they have to be willing, and the FDIC and the Treasury, they have to be willing to overshoot here to protect the confidence. And that's where we are now, Matt. We're actually now at that final layer where we're almost ready to crack. We're down to the crisis of confidence now, where there used to be other crises that we had to deal with. Now we're at the raw layer, we're right at the skin. And so now, if there is a crisis of confidence that the Fed cannot contain, it's over. But as long as they can contain it, that's what I'm saying. As long as they are able to contain it, then they're going to hold it off.
All right. Well, we are going to jump to break here in just a second. And I just want to let you guys know that we're going to come back. We're going to have a lot more questions to ask Jerry, because I got a lot more ground to cover. So stay put, because it's going to get really, really interesting. And if you're listening to this online or even on the radio, call up a friend, tell them to tune in, and hey, maybe share it on social media. Give us a like, because guess what? This information could be very important for you moving forward. We'll be right back with Cryptocurrency with Matthew J. Moore. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. Do you have a strategy to obtain Bitcoin on a regular basis? Do you plan to automate your dollar cost averaging? What about getting all or part of your paycheck in Bitcoin? GetHedge.io is revolutionizing how you get paid. Hedge makes it easy to automatically convert your pay into Bitcoin. Whether you're an employer or employee, you can get started in 4 easy steps. Start getting paid in Bitcoin, Ethereum, or Litecoin. The great part about using Hedge is you can skip the exchange experience altogether and have your Bitcoin sent directly to a wallet you control. Self-custody is key, and GetHedge is giving you the power. Hedge is here to make it easy to stack those sats month after month. Bitcoin, it's a long-term play, so what are you waiting for? Start living on the Hedge, and don't forget to let them know that you heard about Hedge from Cryptocurrency with Matthew J. Moore. Use my referral link at mattjmoore.com, or you can go to gethedge.io. Again, that's gethedge.io.
Short-form video content is taking over social media, and with only seconds to capture someone's attention, our team can help you stand out from the crowd. At Sooner Marketing Solutions, we'll produce and publish engaging TikToks, Instagram Reels, and YouTube Shorts. If you feel like you're falling to the wayside and missing out on the exposure that you deserve, click the link in the description to get Sooner results now.
Do you owe the IRS $10,000 or more in back taxes? Are you being audited or investigated? Has the IRS sent you a letter demanding payment? You may not owe what they claim. Make this free call to the tax doctor now. Let them negotiate with the IRS on your behalf.
800-262-4182. 800-262-4182. That's 800-262-4182.
Welcome back, America. It's round 2 of America's Bitcoin-focused radio show. And whether, like I said earlier, whether you're a Bitcoin lover, newbie, or expert, we have something for you. And we're going to keep you interested. We're going to educate you and entertain you. We're going to even welcome all of you Bitcoin haters. And maybe, just maybe, if you come along on this journey, we'll convince you of something unique and wonderful about this thing called Bitcoin. Because this radio show, Cryptocurrency with Matthew J. Moore, is not only made for everybody, but we're one of the only syndicated radio shows in the country that's dedicated to this topic known as Bitcoin. And today we're covering a very unique topic that does relate to Bitcoin, and that is the banking system, right? So we're a lot is unfolding right now. Things can happen really, really fast, and we've watched this past week that things have been happening really fast. So we actually plan to release this episode in podcast form on March 18th, because this episode may, like I said earlier, might be outdated in just a few days due to how things kind of continue to unfold. But if you're listening to this on the radio, a lot of this is still going to be not only interesting, but very pertinent for you to consume and understand. And so we encourage you to still kind of tune in, listen to what we're saying. And then, we're asking this question: is your money safe in the bank? Are we under another pivotal moment in the banking system, the financial system, monetary system? People are even saying, is this 2008, even though it's structurally different? But we're gonna be talking about all of these things, and we have a unique guest on today that has been on the show before. He's a returning guest, and we're going to introduce him here in just a minute. He's already given us some great information, but in the house, across the table from me, is my producer, Brian. He is on the soundboard, making sure I sound crisp to that ear of yours. He is also the mad scientist who created our awesome intros and outros. He is our music master. Brian, thanks for filling in, not only as my producer, but also as my co-host, because you know what? Eric Cooper, he's out once again, but I still love him, and you're doing a wonderful job, man.
I appreciate it, Matt. Thank you so much.
Well, hey, so if people are really liking what they're hearing and like, hey, man, this sounds really good, high production quality, I love your music, I love your intros, where could somebody go and find your work if they wanted to hire you for something like this?
Well, you can find my work on Spotify, Apple Music, SoundCloud, those different platforms. But you can also go to my website at beyondyouproductions.com.
I love it. Well, on the line is returning guest Jerry Robinson. He is the founder of followthemoney.com, and he is a well-known trend trader and economist. Jerry, since this is a radio program, we never know who's jumping in their car and tuning in. Please introduce yourself to the listeners one more time.
You bet. My name is Jerry Robinson. I'm an economist. I'm also an investor. I invested in Bitcoin more than a decade ago. I'm an early investor there. Very happy with that. And I teach people how to make more money, how to invest their money, how to trade at followthemoney.com. We have students all over the world.
It's beautiful, beautiful stuff. And, I've really been enjoying our conversation so far. In fact, I wanted to bring this topic up. Nick Carter, who I follow on Twitter, he tweeted earlier this week that, this is a quote, is banking cannot be made safe because convincing regular folks to consign their savings to banks to be transformed into risky, productive capital is the point of today's banking. So he's basically saying there that banking is maybe not what everybody think it is. A lot of people think they just deposit their money and it's going to be sitting there in full. But to drive this point home, here's a piece of satire from South Park that I want you guys to listen to. It's quite funny.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Well, what can I do to get back
I'm sorry, sir, but this line is for bank members only.
I just opened an account.
Do you have any money invested with this bank?
No, you just lost it all.
Then please stand aside for people who actually have money with us. Next, please.
Hey!
Hello, Mrs. Farnickel. How are you today? Making a deposit, are we? Great. We can just put that into your retirement account and make it go to work for you, and it's gone.
What?
Sorry, yeah, that's gone. Please step aside for people who actually have money with the bank. Next, please.
So Jerry, what is your thoughts here? Should people be trusting banks today with their wealth?
Well, yes and no. I mean, they should trust but verify. Obviously, the banking system here in the United States has been sound for some time. It's obviously based upon something that's a lie. But I think we all know this, or at least we should know this. And through broadcasts like yours, people can understand how the banking system really works. So money itself is debt, and I'm sure you've taught on that topic. But as far as running out and taking all your money out of the bank today, I don't think that's the answer. I think what the answer is to realize that the FDIC insurance that is on your deposits must be respected. So if you have more money than the FDIC limit, which is currently $250,000 in a regular bank, albeit much higher for those with Silicon Valley Bank. If so, well, then you want to be careful. You want to diversify your FDIC risk. The day that FDIC insurance goes away, some people may say, well, what about FDIC insurance? What if it goes away? Well, the day that FDIC insurance goes away, we have much bigger problems. The day that they don't honor that, we'll have much bigger problems. So it's best to think about the U.S. banking system as a game of musical chairs. It's really, and as I've stated before in this interview, it's just really one social media panic away from being exposed. So quite frankly, I'm surprised that we haven't had, and maybe we have already, but I'm surprised that we haven't had any successful attempts by hostile foreign state actors to exploit our nation's collective fear, our propensity to gossip, and to spread fake news through social media that would be designed to spark bank runs. I believe this is something that we all need to be prepared for. Your bank may be solvent today, it may be fine, but if a panic hits social media about it, it may not be fine. And as I mentioned, if it's an institution that is a very small local community bank, and this happens to this bank, well, Washington is not, going to be very concerned about that. And, if its name is not Bank of America or Citibank or JP Morgan or Chase or one of these big major names. So on one hand, you want to support the local banks, you want to support those banks, but at the same time, you realize that the risks are growing, and the too big to fail banks, we're seeing a consolidation here, Matt. We're seeing a consolidation of the banking industry, and I think this bodes well for the bigger banks long term because they're going to be able to buy up a lot of assets. I was just seeing that that one of the major banks is going to be buying Silvergate. I believe it was. I want to say it was Bank of America, but one of the larger banks. I forget now. I saw the headline earlier, but they're buying. So one of these banks, and I think that's what you're going to see more of is consolidation, and this is going to be a feasting day for the big banks. Sad.
Jerry, I agree. It looks like a sad situation, but Moody's Investors Service cut its view on the entire U.S. banking system to negative from stable. Does this move say anything about our situation?
Yeah, well, Moody's downgraded the U.S. banking system because it rightly understands that banks are sitting on massive unrealized securities losses due to the Fed's, as we talked about, their historic quantitative tightening campaign that they've had going on now for some time. And as I had mentioned, whenever you have rising interest rates, those rising interest rates cause the value of existing bonds with lower payouts to fall in value. And banks own a ton of these. I mean, they stuff all their money, in treasuries and bonds, treasury bonds and things like this. But now they're sitting on giant unrealized losses because those bonds they bought at lower rates, now that rates have gone up, well, those are worth less. And the way the accounting rules work, I'm not an accountant, I'm not a tax guy, but from what I understand, banks don't incur losses on their bond portfolios if they're able to hold on to them until maturity. But if they suddenly have to sell them, as in the case of, say, Silicon Valley Bank, in order to raise money or to raise cash at a loss, that's whenever the accounting rules force them to show realized losses in their earnings. And so obviously these publicly traded banks don't want to do that because that's going to hurt their earnings for Wall Street. And so these banks are in a tough spot, and that's why we're saying it's a lot like consolidation. But Moody's, as I mentioned, they downgraded the banking system because they understand this. Of course, they understand that the Fed has really, really screwed the pooch when it comes to the interest rate levels that they've raised so quickly. But so too, they realize that there's a lot of depositor competition right now. There's consolidation going on, and we're probably going to see more of this before it's all over with. And so I think Moody's is trying to get ahead of it. Now, if you talk to some of the other leading bank CEOs and you hear what they're saying about this, many of them are saying this is overblown. Moody's has downgraded. It's really, they're just kind of reacting. This is reactive. I'm kind of in the middle on that. I'm not of the opinion that we're going to see a domino effect here with these banks because of what the Fed, the Treasury, and the FDIC have done in coordination to stem a crisis of confidence. However, there really are problems in the banking system, and I think we're just going to have to work through them. But again, I cannot overstress. I think I've said it, maybe 3 or 4 times now. The other thing that Moody's said in their downgrade was the fact that they realize how real the threats of a social media inspired bank run would be. And I think that's what we're in the era of now. So social media is helping foster these kinds of reactions. And it's realized that those can be natural. Those can be due to a real thing, or they can be due to false information. And these bank runs can also be inspired by hostile foreign actors who put out fake information so as to create a panic in the United States. And we have already shown ourselves with a propensity to panic. So, a hostile foreign state actor would love to take advantage of this. So I think Moody's understands that this is a volatile and dangerous time for the banking sector. And while they're well capitalized, that's not really the point. The point is the crisis of confidence is what's coming into view here.
Yo, Russia, China, pump my Bitcoin bags, baby. All right, we're going to move on.
Jerry, Jerry, banking giants like JP Morgan, Citi, and others have been flooded with new deposits in the large movement of funds in the recent decade. More than a decade, it seems that the Fed's actions may have been essentially created two-tier banking system, or a two-tier banking system. The too big to fail banks and everyone else. What are your thoughts?
Yeah, this is the problem we were bringing up earlier, is the fact that we are in a situation where the Treasury has made it very clear that they're going to favor larger banks. This was made clear earlier this week. And so, the Treasury has made it very clear that if a large bank suffers some sort of liquidity crisis, say Bank of America or Citibank or one of these other major leading banks, if they suffer a liquidity crisis, they're going to be made whole. The lingering question is, what about these smaller regional banks? What about these smaller community banks? And the answer that seems to be coming back to us is that not necessarily Washington is going to bail it out, but if the books are good, you're likely going to have big Wall Street banks, these too big to fail banks, taking the opportunity to buy these smaller banks. So in essence, and again, an industry consolidation. So I think a lot of the big banks are poised to receive bailout money from the government in the event that they have problems, and B, they're ready to feast upon the any further collapse of the banks that are due to this, that the government doesn't bail out. So it's created, it really has. But we've always had a two-tier system, and I appreciate the smaller banks. I appreciate the regional banks and the community banks. I mean, I understand that the role they play. The problem is the way this is all unfolding. It's very grim for the smaller banks, and these too big to fail banks are going to be in a strange way, they're going to come out, winning from this and getting even bigger.
And I'm going to sound really bad for saying this because it sounds like I'm rooting against America, but the truth is, I feel like the too big to fail banks is part of the biggest problem that we have in our banking and financial system today. In fact, to your point, I only use very small community banks, and going back to that whole $250,000 insured accounts, most average people don't have $250,000 sitting in their bank account, or over that on a personal level. And if you do, and you're financially smart, you're going to have multiple bank accounts under that $250,000 threshold. But even people like me, like that, just keeps enough cash in the bank to pay my bills, and then everything else I put into hard assets, especially like Bitcoin. But the problem comes with the businesses. I mean, a lot of these businesses who have to pay payroll, they're the ones that are getting spooked, because they may, in order to function, they'd probably have to open up maybe 10 or 20 different bank accounts and have $250,000 or less sitting in there. So what are your thoughts on this? I know we got a couple minutes before we got to go to break here. Does this impact the way people are thinking? Do you think this is more businesses that are acting instead of just individuals?
Well, sure. I mean, it really is. It really is. I mean, individuals who have FDIC insurance, quite frankly, I don't want to be glib here, but I simply want to say that, as long as society stays together, as long as we don't have a total societal collapse, FDIC insurance is going to be there. If the United States, doesn't honor its FDIC insurance, then it loses all credibility. This is not what any empire wants. So the empire is going to try to maintain credibility. So if you have less than $250,000 at a bank, and then you're covered, and it's in an FDIC insured, covered account, well, then, I wouldn't be too terribly worried about what's happening here. It really is not, but if you do have, as you pointed out, if you have more than that, then you definitely need to be assessing.
Oh, I think we lost your audio there. Hold on.
Underneath that FDIC limit.
All right, Jerry, you cut out there for a minute, but we basically caught the gist of it. What I wanted to make mention or ask you before we go to break, Bitcoin obviously had a big rally. Gold and silver has had a big rally with this whole banking upset. Where do you think Bitcoin goes in other hard assets moving forward?
I'm very bullish on Bitcoin. I've been public on that for a decade. I think that Bitcoin is just now preparing to enter into what people will realize is a major uptrend. So back in January, we had said that we expected a low in Bitcoin no later than the end of January. Well, it had come actually in November, so we never saw that low. But also in January, we said that we expected that by April, the beginning of Q2, that it would be pretty apparent that Bitcoin was in an uptrend to most people. And so I think we're seeing that play out right now. So I would say, as your listeners are listening to this, my idea, based upon our research, is that by April, it will be obvious that Bitcoin is back in a major uptrend. And then from there, I see us going into 2025 up to a peak of about $275,000, which is, quite higher than where we are now. At present, we're trading at about $27,000. So, that's 9x, I guess, from where we are. I expect between now and 2025 for the price to rise to $275,000. That's been our price target now for a couple of years for 2025. I'm very bullish. I think more people are onboarding to Bitcoin now because of what has happened in the banking system. It's bullish for Bitcoin. It's also very bullish for gold, which we just saw break above 1950, which was a major area of resistance. Silver still a little stuck down below 2450 resistance, but once we break above 2450, if you're listening to this and we are above 2450, then I would expect that silver could also take off pretty well as well. But Bitcoin so far, from all of this banking crisis, has been the key beneficiary, the primary beneficiary, and I think that speaks as to what we could see in the future.
Well, we got to go to break. We got more great content to cover with Jerry. Stay put because you don't want to miss it. I promise you. We'll be right back. The sun, beaches, parties, education, and Bitcoin. This is the recipe for Bitcoin 2023, the largest Bitcoin conference in the world. Ever thought about meeting industry experts? It's the who's who of Bitcoin, and you can't miss it. Join us in Miami, Florida for the annual Bitcoin conference. Use my promo code BTC Radio at checkout. That's BTC Radio. Learn more at mattjmoore.com.
Okay, I'm talking funny because I'm in the witness protection program. I have too much credit card debt and I don't want people to find me.
Okay, I'm just kidding. We're going to talk about credit card debt. Right, those plastic things that we all have in our wallet. Are you in your 50s or 60s and you're still carrying around a mound of credit card debt? Wouldn't it be nice to start banking that money and save a little money for retirement down the road? We help people restructure their credit card debt all the time. We show people how they can get out of credit card debt in months, not years. Listen, you'll be carrying around credit card debt for the rest of your life unless you deal with it right now. We offer a free consultation so you can learn how you can finally wipe out your credit card debt and start saving money. Give us a free call right now.
Call Debt Solutions Network now. 800-593-0298. 800-593-0298. That's 800-593-0298.
Do you have a strategy to obtain Bitcoin on a regular basis? Do you plan to automate your dollar cost averaging? What about getting all or part of your paycheck in Bitcoin? GetHedge.io is revolutionizing how you get paid. Hedge makes it easy to automatically convert your pay into Bitcoin. Whether you're an employer or employee, you can get started in 4 easy steps. Start getting paid in Bitcoin, Ethereum, or Litecoin. The great part about using Hedge is you can skip the exchange experience altogether and have your Bitcoin sent directly to a wallet you control. Self-custody is key, and GetHedge is giving you the power. Hedge is here to make it easy to stack those sats month after month. Bitcoin, it's a long-term play, so what are you waiting for? Start living on the Hedge, and don't forget to let them know that you heard about Hedge from Cryptocurrency with Matthew J. Moore. Use my referral link at mattjmoore.com, or you can go to gethedge.io. Again, that's gethedge.io.
Short-form video content is taking over social media, and with only seconds to capture someone's attention, our team can help you stand out from the crowd. At Sooner Marketing Solutions, we'll produce and publish engaging TikToks, Instagram Reels, and YouTube Shorts. If you feel like you're falling to the wayside and missing out on the exposure that you deserve, click the link in the description to get Sooner results now.
And we are back in the saddle. It's round 3 of America's Bitcoin-focused radio show. You are here at the right spot at the right time. And whether you're a Bitcoin lover, newbie, expert, or even skeptic or hater, I welcome you. And if you are a hater, yeah, you can always type me out a carefully typed out insult, email that to me. I'll read it. I'll listen to you because we want everybody to be heard, right? This is Cryptocurrency with Matthew J. Moore. It's a radio show that is focused on that topic known as Bitcoin. And yes, we talk about other things like the financial system, banking, monetary policy, politics, history, liberty. There's so much that goes on in the world of Bitcoin that's all kind of interconnected, and that's why we do this show. But on today's show, we've been going over a topic that is unfolding right now, which is a lot of uncertainty, some, I guess people would say, liquidity issues in the banking system, and some are blaming the Fed for their aggressive stance for fighting inflation. We all kind of knew something was going to stir up and cause some problems with how aggressive they were, but today, we have a wonderful guest on. He is a returning guest, and I will introduce him here shortly. But he's been covering this with us, and he's got some great answers to some of these questions we're asking him. So I think you're going to like it. But before I do, in the building is producer Brian LaRue. He is sitting on the soundboard, making sure that I sound easy to that ear. Brian, thanks for helping us sound great, man. Are you enjoying this show?
So far, I love it. It's amazing.
Well, you're doing a great job, man. And thanks for filling in as my co-host since Eric Cooper couldn't be here. Eric, absolutely. I still love you, but I'm going to give you a hard time. I hope the play that you're going to right now is enjoyable. Brian, if people liked our intro, maybe they liked our music or how you're kind of producing this radio show, you're for hire. Where would they go check out some of your work?
Well, you can go to my website at beyondyouproductions.com and have my work there. Some samples and everything you can check out. I'd love to work with you if you have any projects.
I love it. Well, on the line, like I said, is returning guest Jerry Robinson. He is the founder of followthemoney.com, and he is a well-known trend trader and economist. Jerry, since, like I said, this is always, people are tuning in all the time. So please introduce yourself one more time to the listeners.
Oh, sure. Happy to. Yeah, my name is Jerry Robinson. As you heard, I'm an economist. I'm an investor, and I'm a financial educator through followthemoney.com. We teach people all over the world how to invest, how to trade, how to earn more income, and how to be responsible with their money. They can find us on followthemoney.com.
Excellent, excellent. Well, definitely visit his website. I'm sure you're going to find a lot of great resources there, Jerry. Although we can't give financial advice on this show, what are you personally doing moving forward to protect yourself from complete collapse of our financial system?
Well, the only thing that you really can do if you want to protect yourself is to outpace inflation. And the way to outpace inflation is to invest, simply. You can save, but if you save what's being inflated, then you're not really going to stay ahead of inflation. So you have to invest. And when it comes to investing, many people don't know where to start. What I do and what I teach other people to do is simply to dollar cost average into high quality assets. And that may be real estate. You may want to buy real estate. You may want to say, I want to buy one rental house a year, one rental house every 2 years. That's what I do. I like to buy a rental house per year. I also like to invest just a small part of my money into the stock market, into high quality companies that pay yield, that have a very long track record. I also like to invest in hard assets like gold and silver. I like to invest also in businesses and then also in cryptocurrency. About a decade ago, I began allocating 5% of all available investment capital towards Bitcoin. And that was a great decision. And I continue that even to this day. A nickel of every dollar that I have to invest goes into Bitcoin. Now, some people would say, well, I'll put a lot more into that. Well, that's fine. I have other projects that I do. So I have things to do with my money, but 5% every single week goes right into, Bitcoin. And I think that, you should have something like that, some sort of allocation for yourself. And the best way to do it is to meet with a trusted financial advisor. Quite frankly, that's the very best way to get a handle on this. But that's what I would recommend to people to do. That's what I do. And I also have a financial advisor, and I would encourage others to sit down with someone and have an x-ray of their financial situation.
Yeah, and you were talking about protecting yourself from inflation, and we talked about the FDIC insurance, the $250,000 limit, and how, a lot of what's going on with this whole banking issue and liquidity issue, and people who are running on the banks, a lot of these are businesses who have, payroll to pay as well, but and they may have more than $250,000 in their bank account at a time. But even if you are an individual and you have, maybe $100,000 in the bank, or maybe even, $240,000 in a bank account. To Jerry's point, it's a melting ice cube. And I often say, and Jerry, you might concur with this, saving is for losers. And I'm not trying to be mean. It's just that you're going to lose purchasing power every single year because you're not necessarily going to beat the rate of inflation. And moving forward, based off how the monetary system is designed, inflation is going to continue to be a problem, in my opinion. But Jerry, what do you personally have to offer people when it comes to maybe understanding or preparing for the worst case scenario? Like, do you have any products, services that you can, shoot them to?
Yeah, there's a couple of things that immediately come to mind. I have some free resources and some paid premium resources. So the free resources initially would be our 5 levels of financial freedom. And I think you might be familiar with those, Matt. Those are in our book, Bankruptcy of Our Nation. They're also on our website, followthemoney.com/5 levels. There, I share the 5 levels of financial freedom that my wife and I actually embarked on to achieve financial freedom. And so we lay it all out there. So if anyone wants a blueprint, it's right there and it's completely free. On to saving. You had mentioned that, about saving being a problem. Well, it is when you do it traditionally. However, what we've done is we've actually created a very interesting, diversified saving strategy that people can access for free on our website, followthemoney.com/DSL. D as in diversified, SL. And that's a very powerful report that we have there that's completely free, that you can read through and see how we were able to get much better returns on our savings by using things like gold, a little bit of Bitcoin, and then other things as well. But it's a very interesting study that we did, a long-term study. Now, for premium resources, I would encourage you to go to our website, followthemoney.com/shop. There we have a really important video on Bitcoin that is a Bitcoin 101 video. If you want to get immersed in this is I think it's very, very cheap. I think it's like $7 or something, but it's a very powerful video that will really introduce you to this in a way that, I think is unique. And then obviously we also have our memberships here at Follow the Money, where people say, you know what, I really want to go deeper and I want somebody to train me. I want somebody to coach me along the way. Well, that's what we do. So followthemoney.com/join. You can take a 7-day free trial and access all of our resources entirely free for 7 days.
Well, we got about a minute before we got to close the show. So I'm going to ask you, Jerry, are there any final thoughts that we didn't cover or any points you want to make before we close out the show?
Well, I think people should be encouraged. They should be encouraged to continue to stay the course. If they're investing and they're investing regularly, I want to encourage them to keep doing it, to dollar cost average, to stay the course. If they're investing in Bitcoin, don't stop. Just keep doing what you're doing. And remember to try not to get caught up in all of the minutia in life. There's a lot of debate out there, whether it's on social media or it's in the corporate media. There's a lot of people who are vying for your attention. And the best thing that you can do is you can avoid the debate and you can prepare. And so preparing now for what's ahead, I think, is incumbent upon everybody. You want to protect yourself. You want to protect your family. And listening to shows like Matt's, I think, is a good way to do it. And coming to followthemoney.com and checking out what we have, I think, is another good way to do it. So thanks again, Matt. I really appreciate the opportunity.
Yeah, absolutely. And if you're listening to this show and you found us online, thanks for clicking my show, because I did do a little bit of clickbait there, but it's okay. Like Jerry was saying, this show is going to be very valuable for you because you're going to learn something, but we have fun every single time. And if you're listening to this show on the radio, thank you for listening. Hopefully we taught you something new. And if you're listening on YouTube, Spotify, iTunes, or Google Podcasts, get out there, share the word, post, like, subscribe, do what you got to do to let me know what you think and be a part of the conversation, because this show, I'm literally trying to change the world. I'm trying to change people's perspectives on what's coming and what is money. because there's a lot to unpack. It's a big rabbit hole. But until next time, my friends, we're going to see you next week, same time, same place. Remember, Bitcoin is changing the world. Don't get left behind. Join us every week.